Hello and welcome to the channel, where we break down the most fascinating corners of the market, specifically hard to borrow stocks and potential short squeeze candidates. Today, we're diving deep into a stock that's caught our attention, the ATP Corporation, trading under the ticker ATPC. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. ATP Corporation, or ATPC, is an interesting company operating in the consumer defensive/packaged food sector. It's an investment holding company focused on supplying health and wellness products and health solution advisory services primarily in Malaysia. ATPC is structured into two main segments: skincare, health and wellness, and green energy. With a current market capitalization of approximately $2.05 million, ATPC is firmly in micro-cap territory. Looking at recent price action, ATPC has seen some volatility. Today, it's down slightly by 0.40%. Over the last 5 days, however, it's up a respectable 7.79%, but zoom out to the last 30 days and the picture shifts to a 17.0% decline. Show chart, ATPC 30-day price chart. What is cost to borrow and why it matters? So, why are we talking about ATPC today? It appeared on our hard-to-borrow screener with a staggering annualized cost to borrow, or CTB, fee of 729.2%. Highlight CTB number. What does this mean? When you short a stock, you borrow shares, sell them, and hope to buy them back later at a low price. But borrowing those shares isn't free. You pay a fee similar to interest on a loan. This fee is the cost to borrow. A low CTB might be 0.5% or 1%. But for ATPC, we're talking about an annualized fee that's more than 7 times the stock's value just to hold a short position for a year. This indicates extreme demand to short the stock and or an incredibly limited supply of shares available to borrow. Why this stock is hard to borrow right now? ATPC's estimated float is only around 0.5 million shares. That's a tiny pool of shares available for trading. When short sellers want to borrow shares from such a small float, the supply quickly diminishes. This scarcity drives the cost to borrow through the roof, as we see with ATPC's 729.2% CTB. Show visual supply and demand curve for borrowable shares. Think of it like a hot concert ticket: limited supply, high demand, sky-high prices. The high CTB suggests that short sellers are either extremely convicted in their bearish bet on a ATP Corporation, or they are stuck in positions and trying to find shares to cover, or perhaps both. Our internal composite squeeze score for ATPC currently sits at 50.2 out of 100, placing it squarely in the middle. An intriguing setup, but certainly not a guaranteed squeeze. Squeeze mechanics explained. So, what is a short squeeze and how does ATPC fit in? A short squeeze occurs when a stock's price starts to rise, forcing short sellers who borrowed shares to buy them back to limit their losses. This buying pressure, in turn, pushes the price even higher, creating a snowball effect. For a stock like ATPC, with its incredibly high CTB and small float, the pressure on short sellers can become immense. Imagine shorting ATPC and seeing the price tick up. Not only are you losing money on your position, but you're also paying that exorbitant 729.2% annual fee every single day you hold it short. Show animation, price going up, short sellers forced to buy, price goes higher. If a significant number of short sellers decide they can no longer stomach the fees or the rising price, their forced buying could ignite a powerful upward move. This is especially potent with a low float of 0.5 million shares, as any significant buying volume can have a magnified impact on price. However, it's crucial to remember that a high CTB does not guarantee a squeeze. It can also signal that short sellers have very strong conviction that the stock will fall, and they are willing to pay a premium for that bet. Dilution risk check. An essential part of analyzing any potential squeeze candidate is checking for dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can depress the stock price. This can completely negate a short squeeze thesis, even if the cost to borrow is sky high. We've checked for recent dilutive SEC filings like -1s, -3s, or 424BS for ATPC in the last 90 days, and we found no recent dilutive filings. This is a positive sign, as it means the company isn't currently adding fresh supply to the market that could offset a squeeze. Furthermore, there have been no recent reverse splits for ATP Corporation in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For APC, with its 729.2% CTB and tiny 0.5 million share float, what should we watch? The most critical factor will be volume. Today's volume for APC was only 45,800 shares. Compared to a 30-day average volume of 1,739,190 shares, that's a relative volume of Xerox average, essentially hardly any trading activity. Highlight volume numbers. A short squeeze needs significant buying pressure, and that comes from increased volume. Without it, even the highest CTB might not trigger a squeeze, as shorts aren't actively being forced out. Keep an eye on any news or catalysts that could draw attention to ATPC Corporation and increase trading activity. A sudden surge in volume could be the spark needed to test those short positions. ATPC Corporation, ATC, presents an intriguing setup with its microcap status, small float, and astronomically high 729.2% cost to borrow. These are classic ingredients for potential short squeeze, signaling extreme pressure on short sellers. However, the current lack of significant trading volume highlights that this is a situation to monitor rather than an active squeeze in progress. Remember, the market is complex, and high fees don't always mean an imminent squeeze. Do your own thorough due diligence. If you found this breakdown of APC and short squeeze mechanics helpful, please hit that like button, subscribe to the channel for more unique analyses, and let us know in the comments what other hard to borrow stocks you're watching. Thanks for tuning in, and we'll see you next time.